And there you have it. The markets are officially closed on this Wednesday, September 17th. Welcome, investors and traders. I'm AJ Monte. And with me, we have Nod from our very own NODLive dynamic news feed. If you're interested in that, be sure to catch the scan code that pops up on there. And right away, I want to bring Nod on to talk about the crazy roller coaster of a ride we had since 2 o'clock and right up until the close. Nod, what are you seeing on your end regard to the Fed rate cut and some of the commentary that followed?
AJ, I just ripped up my notes because honestly, they're of no value. So I'm flying without a parachute here. I mean, we got the 25 that everyone was expecting, but if you look at what happened, so 9 out of 19 officials see 2 additional cuts in 2025, 2 see 1 cut, and 6 see no more cuts. So this really gave us no more clarity, which is why I think we saw a kerfuffle, if you will, in equities. No one really knows what's going on. 25 is a nice gesture, but it's like throwing a deck chair off the Titanic here to make a difference. I'm not sure what it's going to do for our friends in the real estate and the lending market. I hope it gives them some activity. But again, I think the reaction in equities, AJ, is kind of apropos to what people think. No one really knows what to think moving forward because no one knows.
Well, there's that old saying, buy the rumor, sell the news. And that's exactly what we saw right up until 2 o'clock p.m. Eastern time today. We more or less had a pretty quiet market Monday and even yesterday. And the market's pretty much baked in the rate cut from the get-go into the price action. But I think that investors and a lot of the traders and maybe even some of the fund managers were expecting a little bit more with regard to the cuts. And we all know that Jerome Powell has been under pressure from the Trump administration to cut hard and fast. But I think there's a lot of resistance there, as you said. Not everyone was on board with the rate cuts as we expected. And if you look here at the intraday chart of DIA, right here, I was on a call with one of our VIPs, Dr. Rob, when the news came out. And initially, look at the buildup right up until the 2 o'clock mark. You see, this was the anticipation. You could even say this was somewhat, not completely manipulated, but somewhat of a pump and then a dump right after the news came out. And one of the reasons why we see a lot of the markets and even individual stocks sell off after the news is because, again, the traders are looking at this and go, okay, so we got a 25 basis point cut. How long do we have to wait until the next session comes around? And what could possibly happen from the Fed that's going to cause this market to go up any higher than it already is in this extremely overbought market? And so a lot of the profit taking took place. And then we had a little bit of a bounce towards the end of the day. But the other story, Nod, and I'm sure you could pull up a chart or two, what was happening here, gold, or you could look at /GC in the futures markets. We had this big rally right up after the announcement was made. And then we had massive profit taking, and then we had more stabilized. Now, what I think is going to happen is I think eventually gold and silver and the gold and silver miners are going to start rallying maybe by the end of this week and definitely towards the end of September, again, as the interest rates are now, the lower interest rates are now welcoming inflation. And we'll take a look at the dollar later on to more or less drive that point home. But not this very, very interesting day and a lot of opportunity.
Well, I want to show 2 things real quick. Let me pull up this chart on Fed funds rate and just show you where we are now. So this has kind of been the journey. This is what people have been trying to predict, and no one's gotten it right. It's been a little bit of a cat in a bathtub, as we like to say. So we got this kind of ceremonial 25 basis points, which, again, like I said, I hope is great for our lending friends and for those in the real estate. But if I pull up this one, AJ, this Bank of America sent this out yesterday. So 91% of fund managers felt that even before today, that the NASDAQ especially is overvalued. So again, with today's move, and we thought we were going to get a big reaction. If you look, the NASDAQ actually closed down today. Can you just do kind of a quick sweep on technology, the Qs, and this type of market? Because with fund managers feeling it's that much over purchased, what do we do?
Well, the valuations are coming from many different sources. You got the Buffett indicator, you've got the Shiller PE ratio that a lot of people follow. Last week, I talked about the S&P with regard to the number of stocks or the percentage of S&P stocks that are trading above the 50-period moving average. And before we get into the Qs, you can see here this green dotted line, which I do believe I drew a couple of weeks ago on a Wednesday live report. Right there, we are at 0.5427, which means that just about half of the S&P stocks are barely above the 50-period moving average. And it also means that we have roughly 46% that are now below the 50-period moving average. And the reason I bring that dotted line up is because if you look in the past, when we've crossed below that level, we have had pretty significant sell-offs in the general market. Now, for those who are joining us first time around, let me give you the ticker symbol for this. We'll highlight that for you. It's $SPX for the S&P 500. So it's $SPX, the letter A, alpha, the number 50, 50, and R for Romeo. So again, $SPX, A, 50, and then the letter R. And you could track this. I use this now, and I haven't always used it as such, but I use it now as a leading indicator, very similar to the way we look at the VIX. Now, going back to what you talked about on the Qs, we could look at the daily chart, and you can see that we are still trading below this fan line here that I drew a few weeks ago. And if I take a step back looking at the monthly chart, there you go. We're still in this vertical price action here with the number 5, or actually that's number 6 fan line has now been violated or broken. So we still have a lot of September left and October left in this session here as we come into the final quarter of 2025. But I don't see how much more this market could go up with the valuations the way they are. Now, you have to understand, we're still taking long positions and making money on the long side. We're pretty much balanced out. I'll just throw this one out for our equity traders. I can't tell you exactly what I'm doing right now, but I can give you the ticker symbol and let you all know that yesterday a publication went out on QFIN Holdings, which is an ADR out of China. And look at this beautiful move when the markets are trying to figure out which way to go, up, down, or sideways. QFIN made a tremendous move on incredible volume. This is probably the 4th highest, maybe the 5th highest volume day of the year. And the beautiful thing is that we crossed and closed over that 20-period moving average. So our members are in this baby right now, enjoying life after a pretty significant week last week. With I couldn't even pick one trade of the week, so I had to give you 2.
You were very generous, yes.
And I'm telling you tonight, for those that, again, just kicking the tires with StickyTrades here, tonight we're going to go for a full hour looking at charts in a very rapid fire type of a format where I'm going to put targets, just like what we did here the week before last. I put that target on QFIN at $30.45. Today, the target had hit, and we'll have to see if someone brings this one up on the webinar tonight. If they don't, I will tell you right now, I think this thing still has some upside potential all the way up to around 33.5, where we have this gap that's still staring us in the face, waiting to be filled. And I'm telling you, folks, this is just one of the stocks that we've had success with. And it's a great trading market. I can't say that it's a comfortable market for investors because when the volatility is this low, investors are sitting back with their arms crossed going, what do I do here? Do I take profits? Do I sell calls? Do I buy more? That's the big question. But traders don't have to sit back on their heels and wait for the next opportunity. We're being surrounded by trade opportunities right now.
Well, speaking of opportunity, I wanted to bring up oil. We don't talk a ton about oil, AJ, but check out this chart. With all the noise going on, bullish bets on crude are at an all-time low. So you talked about rapid fire. I wouldn't mind hitting you with two. Can you just do a quick look at crude oil and then maybe like an Exxon Mobil for context for people? Because again, in a rate lowering environment, that can mean a lot of different things. It could also mean that things aren't great. The companies will be laying people off and the usage will be low. I don't know what the technicals are going to tell us on both crude and Exxon.
Well, we don't have any positions in the oil sector right now, but looking at, this is ticker symbol /CL for the Thinkorswim users out there that are looking to track the futures prices for crude oil. What I see here, you can look at today's candle showing a bearish Harami. It might pull back maybe just a little bit. But when I take a step back and I look at the 10-year weekly, look what's happening right here. I'll try to draw a straight line if I can. You see this whole area right here of resistance? I'll just put a little R. We had some significant resistance that eventually broke right here. It broke out and it turned into support. And what we're seeing right now is this continued layer of support that's giving any of the crude or oil traders, even those that are trading oil services through OIH and such, these offer opportunities from the long side. And so there's so many different ways that you could trade this. I'm not giving a specific recommendation or giving you any financial advice here, but I can tell you when there are stocks or ETFs that are on major support levels looking like they want to go higher, the option traders could be selling credit put spreads to bring in some cash. You could be taking a little money and perhaps buying some longer term leaps, which are going to go up with the price of the stock, and you could make some money on the way up. For the more sophisticated option traders, you could be doing calendar spreads or diagonal spreads. Like I said, option traders have a whole menu that they can select from when looking at a stock like this. So you also have to consider, Nod, what we talked about in the warm-up is, Donald Trump is putting a lot of pressure on NATO to more or less sanction Russian oil. I don't know if that's going to work because, well, quite frankly, Putin is shrugging off any sanctions, thinking, what are you guys doing? We're slowly moving away from your dollar, and we have plenty of other people in the world to be buying our oil from us. So I don't know how well that's going to work. I think that's, quite frankly, a bunch of hot air, looking like you're trying to do a good thing to hurt Russia. But Russia's not going to get hurt in the oil markets, I don't believe, because all they have to do is pull, some kind of a rabbit out of the hat with China and offer them some great deals on oil paid for in gold, not US dollars. And I think this thing could take off. Now, looking at OIH, because there's opportunity here as well. Again, this is the Oil Holders Trust. It's an ETF. You could see that we have, again, another role reversal support level here. See this resistance back here in early to mid 2020. We had that breakout. This is a weekly chart going back 10 years. And once it broke out, that resistance line reverted back to a support level, and it's tested it now just about 5 times. And now you're looking at the weekly charts in OIH, and it's trading very nicely over the 20-period moving average. So here, just like I mentioned in crude oil, some of the strategies, you could sell put spreads, you could sell puts for cash secure puts, you could buy calls, you could do call spreads, you could sell in the money put spreads. I mean, if you're not familiar with option trading, go buy a book or go online and learn how to trade basic calls and puts and practice. Don't put your money at work right away. Practice, learn how to get in, learn how to get out, learn how to put an order in less than 5 minutes. And I'm joking here, but serious, you should be able to put an order in anywhere between 30 seconds and 60 seconds once you get proficient. And then you learn how to read the charts to follow along and basically you're positioning yourself ahead of the signals, which is nothing more than telling us which way the money is going. Is the money going in? Well, if so, we see uptrends. If the money going out of a particular stock or sector, well, now we're going to see downtrends or down legs, which again gives us opportunity for us to be able to trade.
Well,
Yeah.
we know where the money's going, AJ. You know, I lived in Grand Cayman for 8 years, and right now those waters, I wouldn't want to be a fisherman right now. There's boats that are disappearing, and we know that has to do with oil and with the dollar, and they want to protect our dollar. That's for sure. And AJ, you know, the elephant in the room, especially after a rate movement, is the dollar index and everything that's tied to it. I mean, we could take this 26 different ways, but can we dive into the dollar and then maybe kind of parachute off into the gold and silver, because they're all intertwined, and they're all going to have different moves with what's being said today and moving forward.
Well, think about this. Let's go back to a little economics 101 if you paid attention in college. Economics 101 and 201. All right. Well, first and foremost, you have to understand they're lowering rates, which they are. They did that today. That makes the dollar less attractive to the currency traders who might be trading in another fiat currency, whatever that may be. Right. So let's say I'm not giving you this as a trade. I'm giving you as an example. Let's say that the U.S. dollar and our bond market especially is giving us a higher return. Right. We'll have a yield to maturity, let's say. And then all of a sudden, the Japanese trader wants to take their yen and put it into a U.S. based market. Right.
Carry trade.
Right. So what's happening now is as interest rates go up, the bond market is going up, making it less attractive for someone who wants to buy our dollar. You see, they have to go through a currency change to do that, right? And so that's weakening the dollar. That's number one. Number two, it's making products for the U.S. consumer more expensive because you'll have buying power. Now, look where we are. This is a monthly chart of the dollar. And you look at these oscillators down here. You see this channel? If we break out below that channel line, I think we will, you're going to see a collapse of the dollar that could be very significant. Ultimately, that could be very good for gold and silver, and I think it will, because they are a perfect hedge against inflationary conditions. And it's a real currency that is a store of value. So I'm still a buyer of gold and silver. Every time you see a dip, I'm taking cash in whichever way I can get it through the option markets or elsewhere, and I'm layering in or scaling in to these longer term positions. So that dollar, again, it's $ DXY for the Thinkorswim traders. Now, I see Mike Bennett in there making a comment, isn't a low dollar great for exports? Yes, it is. That is a good point. Mike, because it makes our products cheaper for those overseas who are buying whatever it may be, cars or whatever else it may be. But what's the big elephant in the room? That value that they're getting in a lower dollar is being gobbled up by tariffs. So it's going to be a very interesting scenario how this plays out. But thank you for that, Mike. We really appreciate your interaction there in the comments field. And by the way, Nod, before you come back, we are looking for your comments. We're looking for ticker symbols down there in the live chat. Feel free to type those in. We read every single one of those comments and ticker symbols, and we will be absolutely bringing you your name on it at least. And if you want to be a fly in the wall, that's okay too. So,
well, someone who's not a fly on the wall, let's get after it. I mean, Barbara said, thank you very much for GLW. We did talk about coining with our members, but in an environment like this, that is a baseline company. Can you talk about where you see GLW? Again, not giving away the farm, but where we are post-Fed.
Well, Barbara let the cat out of the bag. So, and thank you. I'm okay with that, Barbara. I just don't want the members who get these trade publications say, what are you doing? You're giving our trades out to the whole world. Well, the trade was made yesterday. So unless you have a time machine that could go back to the time when I put that trade publication out, and if you do that, please let me know. We'll go back to 1986. Okay. But here we have the fan lines on GLW. Now, I've been talking about this for quite some time. The fan lines, as I back out, are nothing more than accelerated trend lines. And we saw a time in history prior to the crash of 2000, we saw a buildup in gold in Corning that was quite impressive. It was a 500% increase from the mid 90s right up until the bubble burst. And that was a big trading stock as well back then. But if you look now, we've got this vertical price move again. And I'm looking at the charts. I'm thinking, we've got a good number of fan lines, and I think this is going to break. So yesterday, we did have a red candle when that trade publication went out, but it did not breach that fan or close below that fan line. Today we did, folks, and our members bought puts. I don't know what the percentage is, Barbara, on what your portfolio looks like in just one day. If you want to share that, that's okay. Not, again, not an income claim or projection of earnings or anything like that. I got to say that. But you know, my point is, this is a beautiful candle for those who are buying puts or bought puts or shorting the stock. Now, where could this go? And this is even conservative for me. I think this could go right back down to 70 to right here, this target of 64.39. Now, how would I come up with that? Well, there's a couple of ways. Number one, you could look at the fan lines and know that every time the most vertical fan line is broken, it has an 8% chance going to next fan line in sequence. But if I overlay Fibonacci retracements on this, you're going to see how conservative this target is. So in other words, if I use my Fibonacci calculator, which is right there on the drawings tools for Thinkorswim, you take the low, you start the line there, and you drop it at this week's high. Now, I'm a big fan of the 38.2 to 50% pullback point. Look where my target is right there, just a hair above the 38.2 Fibonacci retracement level. So these are mathematical formulas that are telling us markets are overbought. There's a good target for a retracement level, and that's how we're positioned. Now, it doesn't mean that you got to wait for that target to hit to take your profits. You can take profits whenever you want. That's totally your decision. But I'm just saying the pressure is on Corning right now. It's going to be very interesting to see how that one plays out. Hopefully, we'll get another trade of the week out using either Corning or QFIN.
Or take your pick.
Yeah, we got a bunch of them. We'll just pick the best performer. That's what we'll do.
Well, speaking of performer, I mean, Palantir, you like to call it the government stock, but what sticks out the most to me is that it's got a PE. I didn't check 5 seconds ago, but between 400 and 600. And I'm old enough to know that that's pretty high. We've got a couple people that are. Greg is asking if you can look at Palantir. But AJ, now that the Fed is out of the room, they've cut 25 basis points. I think we kind of go back to where we were a few hours ago, and with things being overvalued, the consumer being stressed. What are the technicals saying on Palantir, please?
All right, again, we'll start with the monthly chart. How many of you raise your hand or show some kind of a reaction, thumbs up, whatever? How many of you would feel comfortable buying Palantir right now for a longer term, maybe intermediate term move based on what you're seeing there on the technical charts? Now, there actually might be some fingers or hands going up. Fingers going up, maybe some people will give this chart the finger. I don't know. But my point is that the charts, based on all the oscillators that we have, Christine says nope. But based on these technical signals, everything that you're looking on that chart is overbought on the monthly. In addition to that, you see how the volume is dropping as the price is going vertical? What that tells us is that actually it's two things. Investors are running out of cash to buy more of the same stock, and or those who are on margin are running out of margin buying power, and they can no longer borrow anymore from their broker to buy this stock. Now, when those two conditions exist, there is more pressure that's expected to come in as profit taking comes into the stock. Now, I do have a downside target on this one as well. Not all of my targets are to the downside, by the way. Some of you may not believe that, but I have a downside target down here on Palantir at 128. And I think that's also being conservative. Even if I take my Fibonacci's and go from this low here to the high here, where is that bringing you? Exactly to the 50% Fibonacci retracement level. By the way, I knew that was going to happen because we've already drawn the Fibonacci's on that. But your eye could also pick up a 50% pullback point from a high and the low with not too much training needed, for sure. Okay, so Palantir, I think you got to watch out. Anyone who's long, I'd be putting protective stops in, maybe collaring the position with some options, and we'll see how that works.
That was helpful. Thank you. So we as we know, we've seen a heck of a rush of CapEx spending in the AI space, and our members had a nice play on the ticker AI. Now, what people tend to forget is when they cut rates, it's because things aren't great. So there will be cuts in spending, there will be a pullback in hiring. With that in mind, AJ, and with our members already probably closing out their latest move in AI, can you give us a refresh of ticker AI for Herb, please, after the Fed has made their move?
All right, Herb. Well, thank you for joining us, and thank you for commenting, and also thank you for putting the ticker symbol in. Now, for those who got into this trade, I'm talking about it in past tense because I'm out of this. I don't have an interest in buying it right now. I'm very happy to take a profit. It came very close to hitting that target of 1813, and then we started seeing the volume drop here on Monday and Tuesday. You see that? Now, with that volume drop, understand that the mathematical formula behind the CCI is very sensitive. The CCI is at the bottom of the chart right there. And the CCI is very sensitive to momentum changes. And so when you get a drop in volume, the CCI is going to start to turn. If it's going up, it'll start to turn on a volume drop. If it's going down and the CCI is turning up, it will still turn up or change on a volume drop. Now, do I think this could go higher over time? Yes, I do. I think it does have a gap that could very well fill. But if you're taking a step back, looking at the weekly, there is still good, strong support. But like I said, we're swing traders. We're not investors. If it gets back down to a support level and starts to pivot up, I'm okay with getting back into a stock that I just sold for a profit. I'm okay with that. I'll cycle a lot of these ticker symbols. Of course, we look for variety for our members, but I'm okay with cycling it. Another one, if I could just throw it out there, is DEFT. A lot of our members are already in this one. I have to disclose that I'm personally in this one. I'm looking for a new buy area on this one. This is also in the AI space and even the crypto space if you dig into that company. And so I think this could very well be an ABCD pattern forming with A at the bottom here. We did have a pivot today, so now I could put a B here. So there's your AB. If we pull back and pivot back up with a C, we would most likely look for a higher D in that ABCD pattern, which is where I have my dotted line right here at resistance from back there in August. So just as a shout out to that for those that are looking for a good stock to at least watch. You don't have to trade it, but watch it. Use it as a guide to help you learn how to read the technical signals. And then when you think you're ready to go, because you've mastered the art of technical analysis, then you tiptoe into the market and take as little risk as you possibly can at the beginning until you feel comfortable. You know, I'm a big fan of managing risk. And one of the best things you could learn is risk management from the entry point. Getting in on a stock when all the signals are pointing one way or the other is half the battle. Knowing when to get in the stock. Yeah.
Speaking of entry point, AJ, you know, we've got a few minutes left already. I can't believe it, but at 6 o'clock Eastern tonight, you're going to field and forecast 50 to 55 tickers live from our members. Exactly. It'll be a great session, especially being post-Fed. But with our time remaining, can you talk a little bit about trading psychology? I know it's very easy for people to get buzzed up in the Fed. Let the dust settle. The bell will ring tomorrow and life will be well. But how do you think people should approach the markets tomorrow now that we have the Fed behind us?
Last Thursday we did a webinar for our equity traders, and that was actually the topic in trading psychology and talking about how dangerous it is to mix your emotions with trading. And that's why, nothing against CNBC, but I tell people to turn it off all the time, especially when it comes time for you to make a decision to buy or sell a stock, because you don't want to be influenced by the hype, right? A lot of these financial stations have gone hyperbolic on AI for over the months, and people get embedded in that emotion and the greed behind, oh, I'm going to make $1 million by putting this $1,000 that I have in my bank account into this ABC AI stock. So, okay, focus on the charts, learn how to follow the signals, emotions out of it, and with that, join us each and every week to learn how to trade and how to read the charts. And Nod, we are right at the bottom of the hour, so I'm going to sign off right now on behalf of you and I for Sticky Trades. Folks, thank you so much for joining us. Please make sure you go back to the recording, add some likes and comments, help us, please, to build that channel out, and we'll be with you each and every week. So have a good rest of the day. Stay calm. Keep your emotions out. Focus on the charts, and we'll see you next time. Good night.
Thank you.